So disclaimer, let's see how fast I read this. It's been like 3 weeks. Disclaimer, I'm not a financial advisor, and this is in no way financial trading advice. I'm simply sharing option trading strategies that are used and been successful within the stock market. This presentation for educational purposes only. There's significant financial risk involved with trading. I'm not responsible for your losses. No market you decide you lose to analyze the information and our strategies discussed within this presentation by choosing to proceed your knowledge and your understanding of the disclaimer. All right, kind of messed up there, but we still got the speed. We still got the burners. You know what I'm saying? You're on skirt. Take off. Mama. Anyways, so first I want to ask, how many sectors are there? All right, how many sectors are there? Sound like an RX commercial. No, I sound like the end of a commercial where it gives you that quick disclaimer. You might, what do they say? You might exhibit nausea, something. They give you like 20 different scenarios of what you could have. And it's like, I'm here for one symptom, and y'all telling me I'm gonna have 22 symptoms for you taking care of this one thing. It's crazy, right? But anyways, so for now, Dr. Godry, ain't no way you said 4 sectors. All right, so as far as sectors, all right, most people would say technically 11 sectors, all right, because you have Excel, unless you count SPA, right? Most people don't count SPA. So basically, if you don't count SPA, there are 11 sectors. All right, you have XLF, XLRE, XLE, XLU, XLK, XLB, XLP, XLY, XLI, XLC, and XLV. That's your 11s. Well, true. That makes sense if that's all you pay attention to. So there's 11 sectors. Now, I would say for me personally, I only pay attention to, I would say 9 to 10 out of the sectors. I don't pay attention to XLRE, which XLRE is real estate. Now, if you don't know the different sectors, this is a resource I remember Key put me on and a lot of other people back in like 2020 or something like that. But you can look up sectors or basically sectorspdr.com. All right, and it'll show you the different sectors. All right, as well as some people use it during the trading day. I actually look at the chart, but XLRE is the one I don't really pay attention to. Don't really pay attention to XLU. Sometimes I'll pay attention to XLB, but there's like other ones that's kind of like similar. There's another one that's similar to XLB, which is dang it, I actually kind of forgot. What's that other sector? I think it's XME. Yeah, I think it's XME that I potentially would pay attention to more. Yeah, which is metals and minings. So I usually pay attention to that over XLB, which is materials, just because in XME, I think X is more weighted in XME or something like that. So those are the different sectors. Now, this is the reason why the class would end up being long, is because going through all the different sectors, like actually charting them out fully, would take forever. So some of the ones that I feel most of us probably don't care about, or the chart isn't looking very spectacular, we're just going to skip over those for the purpose of this class. All right. So why would these sectors be important? Anybody want to answer that question? Why would knowing these sectors be important? Because you need to know the why. Sectorspdr.com. So sectorspdr.com. Trends to diversify, big picture, tell us what's to come. When one sector is down, another one might be up. Stocks within the sectors move in the direction of the sector. Yeah. Because money leaves one and likely goes to the other. Market moves. You got to know where the money resides. Hey Lizzo, you sound like you be over there with my boy FICO. All right, so I already know that's my guy. Um, but for the most part, it's like it's a couple of y'all. So we combine some of these answers. One, like A Lizzo said, you know where the money resides. All right. Two, seasonality. All right. Which kind of runs into, trends and rotation. Right. So where the money resides and the seasonality aspects. Right. And you can see that by simply looking at the chart. I know a lot of people have this thing where they look at this website and the website kind of shows them different things. The way the market has been, some of the seasonality isn't like it used to be. It doesn't always measure up. So what do I do? All right, so let's start there. What do I do, and going into this year, why is this important? All right, so the first thing you would want to do is go to the 12-month chart. All right. If you're using TradingView, you simply would click on basically, and I'm using the desktop download. You would click on the time frame and you would just drop down here to the bottom. I think if you pay for TradingView, you could automatically put in a custom time frame. I don't think there's a certain amount that you have to pay. I think just off of just having a paid plan, you can put custom time frames down here at the bottom, and you just have to put in, the 12-month. All right. And it's simply just typing in 1 2 plus M. That'll give you month. That's how you kind of like quickly go through the time frames. But you would start on the 12-month chart. All right. So we're going to start with XLC. All right. So XLC, looking at a 12-month chart, we can see that one last year, it really dropped bad. All right. It really dropped a lot. All right. So far this year, we're bullish, right? As long as we stay above our opening price. Now, what I'm going to do is we're going to go quickly. I wouldn't say quickly. What we're going to do is we're going to look at XLC. So right now, XLC, if I'm looking at this, it has a higher chance of going 2 2 continuation to the downside, which a 2 is a strat. This is a strat way of identifying a candle, right? With the strat, we know a candlestick can do one of three things. It's either going to be an inside candle, which it currently is right now. If you see the number down here at the bottom, I don't know why it's so spaced out, but it'll either be a 1, all right, it'll be a 2, or it'll be a 3, right? So if we break the low of this previous candle, it would go 2 down, right? If let's say we keep pushing up and we break the high, we'll go 2 up, right? This is how I personally quickly identify what sector I would want to be participating in. I would be trying to see what sector is going to actually be directional. Our 2s are our directional candle, as well as a 3 is a directional candle. Here's an example of a 3 right here. All right. This is going to tell me the direction. So I'm going to go through them and we're going to see what the yearly chart looks like for all of them. The ones that looks more scrumptious will go next to a 6-month chart. But right now, the way XLC is after how bearish it was last year, it's kind of closer to going 2 2 continuation just by looking at the 12-month chart than it is to coming all the way up here and breaking the high, which is 78.73. All right. So next up is going to be XLY. All right. That's your consumer discretionary. You can see also with this, same difference. We're closer to going down, right? Going 2 2 continuation. And we almost did to start the year. Below 126, that's when we would actually get directional on the year to the downside. And if XLY did get directional on the year to the downside, our yearly price target would be 81.74. That's like the next yearly price target because we already well, no, we actually didn't hit the price target. I was about to say right here. That's where we got directional, but we haven't actually hit our first price target, which would be 81.74. So we did XLC. Let me grab my pen real quick so I can write this down so I can remember which one to go back to and start with. So we just looked at XLC. and we just looked at XLY. So far, is everybody understanding just the quick looking at it? Because that's literally all you're doing is you're going from sector to sector, look at the year first. Then what we would do next is if you're like on TOS, you would look at the quarter. But for TradingView, I like to look at the 6-month chart because we did just get a new 6-month candle. What do I mean by directional is simply meaning if we're looking at a yearly chart, right? And we look at this previous year. So this was last year's yearly candle. What I mean by directional is we're either taking out the low of the previous candle or the low of last year, or we're taking out the high of last year. Because what that basically means, if you listen to like the stock market news or something like that, they'll say something like, we're lower than price was last year. We're lower than we were 2 years ago, right? That's why you hear like a 52 new week low, things of that nature. It just means we're actually continuing to make lower lows, or we're continuing to, make a new low, essentially, which it technically on a yearly chart wouldn't be a new low. But if we broke 126, we would be directional because now price is lower than it was last year, which is very important. Do you have indicators on right now? Yes, I have the Strat Teach indicator, the Strat Teach V2. That's the indicator I have on right now that's showing you the numbers on the chart. Oh, yeah, no problem. So next up is XLP. All right, as you can see, XLP compared to XLC and XLY, y'all can see that XLP is more in the middle, and it's actually a higher chance of it actually going to take out the high than it is closer to going and taking out the low. All right. Obviously, 81 is closer to 75 than 66, right? That's $6.6, whatever you want to say, right? It's closer than 66. So XLP would be something I'd be like, okay, it's closer to showing me that it's really going to be bullish this year. And obviously, XLP is a defensive sector. A lot of people rotate into that sector. That's your Coke, your Pepsi, your Walmart, your MO, which is the owner of like wine and cigarettes and stuff like that, as well as like your KHC. I think like your Cloroxes, that's all XLP, consumer staples. All right. Next up, which XLP, that would be one I'm gonna put a check mark by, because that would be one I'm more intrigued about looking at the 6-month chart next. Will I go over broad information? Yes. XLE, all right. Phenomenal year last year for XLE. XLE is also something that we can look at and say it looks more bullish than XLC and XLY. There's a higher chance of it going and breaking the high of last year and continuing to go up. I think they did vote to lower oil output. I can't remember. All right. So if XLE ends up breaking above 94.71, I definitely would be looking for it to go and break above 101.52, which will end up giving us a new all-time high, right? And that's our swing high right there. So I'm going to come back to that as far as talking about a broad information. So XLE, check. That's something, again, just off of looking at the year, right? I would say, although XLC and XLY could be an inside the year and be bullish this upcoming year, just off of if I was a betting man, so far I like my chances more of having a bullish year so far with XLP and XLE. Does everybody understand that? Is everybody with me? Are we getting the process of how I'm just mathematically just going through this and just looking at a quick look before we even start going down lower into time frames? Just saying, okay, this looks good. Okay, that looks good. Things of that nature. Why did I mark 5781? Oh no, this is like earlier in the year. So like literally I was probably one of the few people going into this past year, 2022, that knew XLE was about to pop. Like people would tell you I was on Oxy all year before Oxy was a thing and Warren Buffett was talking about Oxy. I literally talked about Oxy since like January. That and Walmart. They're like, when Walmart took off, there was no surprise. Like I was one of the few people that was talking about those two specific stocks, like literally all year. Um, so that's XLE. Next is XLF, all right, which is financials. So XLP was consumer staples. XLE was energy. That's your oil, energy stocks, things of that nature. Okay, now we're at XLF. Now XLF is kind of more so in the middle of this yearly candle. This is one that's kind of can be iffy, but it probably has an interesting 6-month chart. A lot of times when you just take a quick look, especially when you're used to having multi-time frame analysis, which means you look at multiple time frames and you look at them with a flow. All right, which is always going to be a top-down approach, which we're slowly working our way through this. All right. But XLF is in the middle. XLF definitely probably has an interesting 6-month chart. So next up is XLV, which is healthcare. That's like your CVS, your PFE, your Moderna. This also looks like it's closer to potentially breaking the high and having a new all-time high at that 143.42. So far, XLV is actually below its yearly open, which right now is actually bearish on the year, unlike the others. So I'm gonna check that because I want to look at the 6-month chart. So XLV. Next is XLI. All right, XLI bullish. We had a 3 last year, and this is a bearish 3. All right, whenever you look at your 3s, you can tell if it's a bullish or a bearish 3 based off the color of the candle. So if it's red, like it is, even though it's showing blue, we can see the outline is red. That means it's a bearish 3. So if we broke the high, that would actually be our 3-2 reversal. All right, if you don't know the strat patterns, Market Facts and Resources has the strat patterns for you that tells you your 1-bar reversal, which is your 3, your 2-1-2 reversal, your 3-1-2 reversal, your 3-2 reversal, your 1-2-2 reversal. All of that is in Market Facts and Resources, but I'm gonna mark this one XLI, which is one of the ones I said to look at. So I already know it has an interesting 6-month chart. Next is XLB, which I actually like XME better. So let me look at XME. So XME is actually looking more bullish than XLB. I personally like to swap out XLB for XME. So I'm gonna write down XME instead of XLB. And that might be one we can kind of like come back to. I'm gonna put a star by the side instead of a check. And then we have XLRE, which it looks like it wouldn't break the top. So this would be something I'm not as interested in. So I'm gonna go past that. XLK, which is technology. It also looks like it's closer to going potential 2-2 continuation down. All right, if it breaks the low of 112.97. If you don't use the strat, what would you be looking for to tell you if it's bullish or bearish? Can't really tell you what you would be looking for, because again, at the very least, you should learn what the 1, 2, and 3 means, which if you watch Intro to the Strat, that'll at least teach you the candlestick numbers, because that's the quickest and best way to identify if something is bullish or bearish, because the indicator is not really going to tell you that. I'm looking at a 12-month, and I said 12-month chart, which is basically a yearly chart, but I said it's looking more so bearish. For the strat, is there a course? There's not necessarily a course. I do have a course that basically goes over it. It's like 14 hours of info. For the people that do have it, whether you got it free the last time I gave it out for free in Market Fails, or you bought it, I'm sure you could tell people whether or not the course is good or not. What sectors did I already go over? So far, I looked at the yearly chart for XLC, XLY, XLP, XLE, XLF, XLV, XLI, XME. Now I'm looking at XLK, and last will be XLU, which I know I'm not really going to too much care about XLU. So XLK looks bearish, and then next is XLU. And XLU looks like it's actually closer to being bullish. So XLU is something that we can actually visit next. So now I'm going to go back to the top, right? Um, and then from here, I'm just going to focus on the favorites that we can actually look at that looks interesting, that you can actually go find stocks to look at because it looks more interesting than some of these other things, right? So going back to XLC, when you're looking at this yearly chart, next thing you would do is go to a 6-month chart if you have TradingView. If you don't have TradingView, you would just go to the quarterly chart on Thinkorswim. So now here, what I'm doing, right? I'm marking these highs and these lows because this is where we understand direction, right? So again, when we're looking at this, this is the inside candle right here. So far, we haven't, and as far as we're on the 6-month chart, we haven't broken the high of the last 6 months, and we haven't broken the low of the last 6 months, which basically means price, as far as on a 6-month basis, isn't making any new highs or isn't making a new high or a new low. It's not breaking, last 6 months high or last 6 months low. Now, why can that be important? It's just like anything as far as with a company, right? If you're saying, hey, price is higher than it has been for the last 6 months, that's bullish, right? If it's lower than it has been in the last 6 months, that would be bearish, right? So this is where the strat comes into place. And it's like, oh, if you went 2 up, that means price is higher than it has been the last 6 months. That's bullish, right? Or if we break and go 2 down and break the low, that's telling us that price is lower than it has been in the last 6 months. This is a quick way to help identify being bullish and being bearish, because sometimes we'll break the low and then come back above that low and be back inside of that range, which means we probably just created a broadening formation, right? Is everybody understanding that so far? It really helps you see, depending on what time frame you are, whether price is higher or lower than it has been on that time frame. So if I'm on a 15-minute time frame and we just went and broke the high the last 2 minutes, the last 15 minutes, and we went 2 up, that means price is now higher than it has been the last 15 minutes. It's higher than it was 15 minutes ago. If price breaks the high on a 30-minute chart, that means price is higher than it was 30 minutes ago, right? And then so on and so forth. And so that, again, helps you understand what is going on. It puts this in the lamest terms and what is happening. Does FXI count? I don't know about FXI. What platform am I using? I'm using TradingView. Can I explain how broad information is formed? I will do that more so towards the end of the class, after we kind of break through here. So right now, looking on the 6-month chart, XLC is in the middle of the range. The next thing you would do is go to a 3-month chart. Now, on a 3-month chart, here's where it gets interesting. We are close to actually having a 2-2 reversal on a 3-month chart for XLC. Now, here's where the strat gets interesting, and here's where multi-time frame analysis gets interesting, right? And this is where you start to use your brain. Let's just put it simple, right? And you start to ask yourself questions. If this happens, then what, right? So for XLC, if we break above 52.19, price will be higher than it was last quarter, right? Because now we're on a quarterly chart, a 3-month chart. So if price breaks 52.19, again, we'll be higher than we were last quarter. That's bullish, especially if we can stay above that price. Because if we don't stay above this price, that's when we become a failed two. And you can learn about that in the intro to the strat aspect to not, waste people's time with this, right? So then the next question is, okay, if we break 52.19 and we keep going and we hit our first price target, because our first price target is going to be this 2 right here. When you break this candle right here, the candle before the candle you're on, basically. So we're on this candle. This candle is the candle before this candle, right? All right. When we break above this candle, now that's when we get directional. Our first price target is going to be immediately the next high that we have that hasn't been taken out yet, which would be this high. This high also happens to be the high of the 6-month chart. So basically, if we go 2-2 reversal and we hit price target, our first price target, we would trigger the 6-month chart, right? And now price would end up being higher than it was the last 6 months, right? which creates this kind of domino effect, because now we triggered the 3-month, we hit our price target on the 3-month, that triggers the 6-month. And then if the 6-month goes and it keeps hitting this price targets, then we can end up triggering the year. Does everybody understand basically what I just laid out? Some light bulbs should have went off. You should be hearing a ding, ding, ding in your head. It should be like, okay, that makes sense. And this is why we do price analysis from a top down. Because if we mark out our 6-month chart and then we go mark out our 3-month chart, we can say, okay, this is what the 3-month chart needs to do to affect my 6-month chart. If I get in on this 3-month entry, one, you would know that you need to buy enough time on your option contract, right? You would need to, if you're operating on a 3-month chart, you need to be giving yourself at least 4 to 6 months of time on the contract. This is where people can start to like get their leaps and stuff like that, right? So now you're like, okay, if this triggers on a 3-month, this is my entry. Here's my target. This works out. Then that's going to trigger my 6-month, which fully lets me know the trade is working out in my favor. Exactly. TMG, trigger machine gun. So, and then from here, you would go to a 1-month chart. And then from there, you would go to a 2-week chart. And which on the 2-week chart, we already hit a 2-2 reversal. All right. So now what I'm going to do is now I'm going to go to XLY and we're going to do the same thing. So go back to the 6-month chart, XLY. Although, you know what? I'm going to skip XLY because XLY is not that interesting to me. I'm going to go to XLP, right? Because I need y'all looking at XLP. This is why I was talking about Walmart. And this is why Walmart is on the list again. All right. So XLP. Remember, the high of the year is right here. So let me actually mark this out. High of previous year. All right. And I'm going to make this a different color because too much red going on. But I ain't no cuz. Anyways, so 6-month chart. We see right here, again, just laid this out, but we did this on the 3-month chart, right? If this would be a 3-2-2 reversal if we break above 77.62 for XLP. Well, what happens if we hit price target? We trigger what? The 2-2 continuation on the what? The year. Does now everybody see, because this one's closer to happening than the other one? Do you see how this helps you in your analysis? Are you understanding like how? And then from here, now what would we do? Then we start looking at the stocks in that sector. So we go look at a Walmart. What does Walmart look like on it? Let me hide all my little drawings. What does Walmart look like? It doesn't have that 3-2-2 set up on the 6-month, but it has a 3-1-2 set up, right? So if we break the high right here on Walmart on the quarter, I mean, not on the quarter, on the 6-month chart, which is 154.64, because I already have it marked out because I'm looking at it, this week. But if we hit 154.64, right, we trigger our 3-1-2. If we hit price target, right, that triggers our year. And that would be a 3-2 reversal on the year. Doesn't have quite the same setup as XLP, but it's going in that same direction. All right, you're saying you're still lost, a little lost. Essentially, what I'm showing you is how to break something down from a top down approach, going from the higher time frame, going to the time frame below it, and seeing how that can affect my higher time frame. And one, how you can get an earlier entry, right? Instead of waiting for the year to get directional, right? Or some people call it being a breakout trader. You can get in on that time frame below that. What's the indicator called that shows the numbering over the candles? That is the Strat Helper. I'm sorry, not the Strat Helper. That was the old one. The Strat Teach. So the Strat Teach V2 by Ngami 7. All right. So yeah, and then you would have to mess with some of the settings. I had to edit the settings, so these aren't the default settings. I had to actually edit it a little bit. When you say trigger, what do you exactly mean? So when I say trigger, that means that's where that line that I'm marking a lot of, let me go back to XLP. And also with XLP, you would look at, like KO, go back to the 6-month chart. You would look at KO. KO has like a 2-2 rev, KO PEP. You also look at KO PEP. KHC is also in XLP, but obviously it doesn't look as bullish because it just got killed. MO, but my favorite in XLP is Walmart. So Walmart is the one the most similar to having that set up because Pep and Coke, KO has just been really just outperforming XLP. But when I say trigger, let me go back to this. My trigger is 77.62, right? To get in this trade, as far as if I was doing like a longer term, even if I was doing a shorter term and I just wanted to swing for a couple of weeks, that could still be my trigger. And basically my trigger means that's telling me to get in the trade. Do you need to understand the strat to understand this lesson? No, because you can still understand what I'm trying to say as far as like breaking it down of how to look at the sectors and stuff, because all you need to understand is the 1, 2, or 3. The strat is more in depth than that as far as like time frame, continuity, broad information. But as simple as if you know what a 1, 2, and 3 is, you know what direction is and what's not directional. All right. Things of that nature. And still, even though you might not understand the strat right now, when we get through with this lesson, you go watch intro to the strat after this, you'll understand what I'm talking about. But the trigger just means, hey, get in the trade, essentially, or hey, look to be getting in the trade. Because sometimes you don't want to get in immediately. Sometimes you want to make sure it's going to stay above that level. You don't always have to be the first person in. But if anything, I would say the trigger is telling me, hey, either get in this trade or hey, this is something you want to be paying attention to. Basically alert, right? It should be alerting you to pay attention to that. Yes, confirmation. Just like if you were looking for a 921 EMA crossover, right? When it crosses over, that's your trigger, that's your alert, that's your signal. It's the same thing. Yeah, I can show you my settings whenever I get through. But so for instance, when we're looking at this right here, you see how this is a 1? This is a 1. It's an inside candle because they didn't break the high or the low of the previous candle. So it's still inside of the last 6-month range. We look at this green candle right here. Like if I do if I do like bar replay and I delete this one, right? This is a 2 and it's a 2 down because it broke the low of the previous candle. All right. If we pay attention to this 2 right here, this is a 2 up because it broke the high of the previous candle. All right. So that was your differences. The one over here was a 2 down. This one right here is a 2 up. So now you know what a 1 and a 2 is. Now, if I basically go forward, you can see what this 3 is, right? A 3 starts as a 2, fails. You can see right here where actually it went up first last year, but it starts as a 2, fails, and comes and takes out the other side. So it breaks the high and the low of the previous candle. And it barely broke this low. The low of this 3 is 68.22. You see the low of that previous candle, 68.32. So a 3 actually takes out both sides. So that's basically what your 1, 2, and 3 is. It's a way to classify the candlesticks to where you can understand what's going on versus just looking at the indicators. Because price action is king, price action is your plug, right? Your indicators is your middleman. The middleman always gives you crazy prices. But when you go straight to the plug, everybody loves the plug because the plug, you can get it at a discount. You get great prices. Everybody wants to be in with the plug. Price action is the plug. Your indicator has to calculate where it needs to be based off what price is doing. All right. You can wait. There's not always going to be a retest. So sometimes you can wait for a retest. but not all the time. Sometimes the trade is just going to go. The best strat trades are the ones that really just go. Sometimes you're not going to be able to just wait. You can just scale into the trade. You do a starter position. You know where your stop loss would be based off the chart. Because if you're trading a strat, it's best if you have a stop loss based off the chart versus like a 20-30% stop loss. The thing with the strat is you just buy time on your contract. Instead of trying to be cute and always go weeklies, give yourself an extra week or two on the expiration, especially if you're looking for a play that's triggering like on the week or on the month. You need to be giving yourself that allotted time. A 1 is a candle that didn't break the high or the low, right? So you see this is a 1. It hasn't broke the high or the low yet. So when looking at XLP, we see that it's close to triggering on the 6 month. If we look at the 3 month, right, we haven't triggered on the 3 month either yet, right? We went 3, we took out the low and then took out the high. So if we do go and break 77.62 on a 3 month chart, it would just be a 3-2 continuation. If we look at the monthly chart though, right, we have a potential of going outside month on XLP, right? To start the year, we ended up breaking and going 2 down. So now this is where like people who do like Sarah Strat Sniper's 50% rule, we have already retraced 50% of the previous month. So we go to like the 2-week chart, you'll see on the 2-week chart, we already went 3. All right. If we go to the weekly chart, we went 3 on the week and we closed above 50% on the month. Now for XLP, all we want to see is this upcoming week. Do we go 3-2 continuation and break the high of last week, which would be 76.08? And if we do, then we would be looking to continue and break above 77.62. All right. That's literally how you break it down from top down. So XLP, going into this week, I'd be watching XLP. And for me particularly, I would be watching Walmart. That's why Walmart is on my list. Yes, 1s are inside candles and 2s break either up or down. If it breaks the high, up. If it breaks the low, down. Does everybody understand what I just broke down here? Enter a small position at 76.08. Yes. Then you would add where you would see a TTO or a pullback, or on like an hourly chart, you would see some liquidity being ran. As far as understanding the liquidity and broad information videos, just for the sake of time, it would be best if you just watch the liquidity / broad information video on my YouTube channel. To really understand, that's an hour of breaking it down. I do still got to remake that video to make a shorter video, but it's a really good video for the sake of time, because I want to make sure I get through the rest of the ones I put a check mark by, because we're definitely going to go over time. But we probably won't have enough time for that. Do I call out my entry in Wealth Squad? I'm actually not a play caller. I'm just hired to teach. So for me, that's not my role to actually call out the entries. But I do have everything marked out. If you watch the Watch List and Chill video, everything's marked out. The contracts are already picked, things of that nature. If you would have paid attention to it last week, MU and AAL were like the best 2 trades off that list. MU being the best. If you had grabbed that 54 call at around the entry price, you would have got it for 0.63. It got to a high of $4, but like more reasonable, you probably would have got it at like $3.60. And that was a multi-day swing. AAL, same thing. If you would have grabbed the 14 call, and this is grabbing the January 20th expiration. This isn't even grabbing the weekly. So it's grabbing the monthly contract, which the monthly contract for options is the 3rd Friday of the month. Those are going to be what has the most volume and open interest. So those are the ones that are best. Those are the most liquid and easy for beginners to get in and out of. AAL, again, grab the 14 call, 0.18 or 0.64. So, plus Key is always doing a great job of calling out plays. You don't know when Key is going to call out 20 plays in one day. Like Key be due for it. He be on fire. So it's like, that's why my role is just to really teach. We have the same, we have a similar strategy. We both use the strat. He uses regular technical analysis. I use ICT with the strat. So that's the only differences. But I know this year I'm definitely going to be pushing more so people buying time on contracts because a lot of people are working. So a lot of stuff you're going to see on my watch list and chill, the contract's going to be 2-3 weeks out, and you're still going to get, you know, anywhere from 100 to 300%. What I think about Jets been looking good so far from what I've seen. I was looking at AAL because the XLI. But anyways, as far as a quick recap for Walmart last week went 2-2 rev on the weekly chart. If we look at the 2-week chart, it also went 2-2 rev. It just hasn't hit magnitude. As far as the daily chart, it kind of chopped around until it ended up gapping up. Now, going into the week, the entry for Walmart was actually here, but I don't know how many people would actually grabbed a good entry down here. But when it comes to the strat, your entry, a lot of times, if it gets above it, that should be, and it gets far above it, that should be where you get stopped out at. As long as you're above your entry price, which would have been the low down here, which would have been the high of this too. As long as it's above that entry, you're good. All right. And that's why you would have been able to, you would have had to hold through some bull crap if you got it initially Tuesday. But the contract at that point was a couple weeks out. It's not a weekly. So you have time on that contract to actually hold and be able to hold through the nonsense. You would just be monitoring. When you're swing trading, you need to be monitoring the trade above the hourly chart. It's okay to get your entry around like the 15-minute, but you need to monitor the trade as far as multi-time frame analysis on the hourly, the daily, the weekly, the monthly, right? Those would be the time frames when you're swing trading. That way you don't get shook out. But anyways, so that's like the recap because it wasn't clean. MU was clean, right? Your entry was above this 2 right here. So that would have been here. So whenever it gapped up and then it ends up breaking below it, you would have just caught it on the hourly time frame coming back above it. Right? You literally could have got in right here or just waited for like this little 2-2 rev or checked it out on the 15, get the sniper entry right here, 3-2. It closes above your entry. You can hold it. Don't be timid about it. And then you see it ends up gapping up the next day and just run it, right? That's the beauty of swing trading if you actually give yourself enough time on the contract. Most people try to weekly everything because they want to see crazy gains. But if you buy the right contract and you actually look at, if you use the Thinkorswim Analyze tab, you'll be able to see what your risk reward would be. And it makes trades like that easy. And then AAL was crazy too. AAL, you would have just caught it the next day. So you would have had to catch it on Wednesday and then just caught it up. Because it actually closed below your entry. The entry was like right here or something like that. So it closed below it and was below it. So I wouldn't have tried to swing that. But then the next day, when it is above the entry, it doesn't even dip down. Your entry would have been like right up in here. And then you just swing it. And that was cheap. So that was that real quick. But going back to XLE, because I already looked at XLP. XLE on the 6-month chart, right now we're inside. We go to the 3-month chart on the quarter, we're still inside, right? We go to the monthly chart. Right now we're still inside, but we have a slightly earlier entry right here above 92.25. But also if we end up breaking the low, we can try to get puts to maybe see if we hit this low right here, that's 74.49. And then from here, you go to the 2-week chart and you pay attention to that. All right. And see where we're going. We did go 2-1-2 reversal. So on a 2-week chart, if I was trying to get back in a trade alpha re-entry, I would be looking for an entry back above 88.36. And then that's where you can look at something like Oxy, see what Oxy is doing. Let me hide this. Or, XOM or CVX, right? And see what those are looking like. XOM looks stronger, so that would be one that you could look at instead of Oxy. XOM looks a little bit stronger than Oxy. It didn't went 3 last week. Oxy didn't go 3, but it does have the potential for the 2-2 rev to the upside, which is why I have it on the watch list. Because if XLE ends up re-triggering the 2-week, okay, energy is back in play. So does everybody understand that? When you see gaps from your experience, what's the fastest they get filled? I don't keep up with how fast they get filled. Because everything is in a race. When you try to make it a race and say, oh, this will be filled in this amount of time, you likely to play yourself. Why do I like 2-week charts? Because it basically can split the month in half and it can give me an earlier entry. Because everything is about entries, getting in at a good price. So if I can see a 2-week having a reversal on it, right? And the monthly, when the monthly gets triggered and basically price action, let's say, breaks above the previous month, that triggers a strat pattern, like a strat reversal. If I know if the 2-week triggers its reversal first, and if the 2-week hits price target, its first price target, and that's the monthly trigger, then I can get in earlier, right? So now I can still get me a contract that's that same position out, but now by the time the month triggers, I could almost be potentially in the money. So like, for instance, MU, that 54 call, that's in the money right now. MU is at 56. That contract doesn't expire until January 20th. So if somebody looked at their list and was like, man, I'm swinging that. I'm finna keep swinging these runners. Because at this point, the trade up 400%. You can keep swinging it. Right. And so to show y'all that, let me see if I still have the charts up for it. Show y'all these side by side real quick without trying to get off subject too far. Right. So, because this class is going to be long anyway, but if I can throw in some anecdotes real quick to show y'all what I mean by giving yourself time. If we look at this is MU, the 54 call, right? We zoom in to Tuesday, right? You could have got in around this area on the 5-minute, right? Because it ends up going back above here. That's it re-triggering, right? Because it's the previous day high right here, right? So you could have got in at 0.63. And then the next day it gaps up. Your entry price is all the way down here. So when you look at that, and I use this, you see from 0.63 to right here is 220%. If you held through that and didn't panic sell, right, and you held all the way to the end Friday, it ended up closing like around this 360 mark, which is 477%. It got to a high of 4. That's 541%. And that's the contract you see right here, the 54 call for January 20th. So 1/20/23, 01/20/23. So you still got this upcoming week. You still got this upcoming week and next week. So if MU was to continue running, right, you could have got in down here. So let's say next week MU get all the way up to $6.30. That's 1,000% on the contract. You see what I'm saying? You already halfway there. You just let the runners run. So anyways, out of that, next up is XLF. So XLF, we go to the 6-month chart. XLF is close to triggering the 322 reversal. All right. If it breaks above 36.49, it would trigger a 322 reversal on the 6-month. So far, XLC has a reversal. XLC is kind of like one of the ones on the lower end, but XLP, XLE, bullish on those so far, right? Now, XLF is something that also would be looking to be bullish on, especially if we can break above 36.49, trigger that 6-month. Next thing we go to is the 3-month, right? 3-month, you don't get an early trigger, right? It has to break that 36.49, and then that would be a 3-2 continuation. And essentially, your first price target is going to be that 38.66. We know to trigger the year and for price to be higher than it was last year, it has to get all the way to 41.70, which on the 6-month chart That's the price target, right? So we go 322 reversal on the 6 month. The price target that we're hoping it gets to is the 4170. We go to the 3 month chart, 3-2. The first one is 3866. Then the next one is 4170, right? We go to a 1 month chart. We see right here it's been just going sideways. But if it breaks that 3649, we get that 2-2 continuation because this red candle is a 2 up. Now, this is where we go to the 2 week. We see on the 2 week, last week, what happened? We got a 3-2-2 reverse. I mean, not a 3-2-2 reversal. I'm sorry, a 2-2 reversal. Right? You see it dip down initially. We go down to like a daily chart. You see Tuesday dips down initially, comes back up, gaps up, right? This is why you don't always chase it, all right? Especially being this far away. This is where sometimes people wait for that retest, right? So let's say you did get in here. As long as you didn't get in heavy, you could have actually scaled in right here, scaled in some more. So we go down to the hourly chart. You see how price action essentially, it was just a TTO, right? Come back, fill this gap, and then it goes back up, right? So you could have looked to get in around here, whether you tried to find an entry right down below on like the 15-minute, or if you just simply took this 2-1-2 reversal back up, right? Stop loss, bottom of this candle, basically right on your trigger. Basically could just make your trigger the stop, right? You swing it, next day it gaps up, comes back down, but it eventually keeps going up, all right? So this is why I didn't put it in the chat, but I had said it on the video and the watch this video. This is why I was looking at BAC. This is why BAC was an honorable mention. If we go to the 3 month chart, see BAC is still inside 3 month. We go to the monthly chart, not really doing much, but if we go to the 2 week chart, it had a 2-1-2 reversal, which a inside candle is your actionable signal for the strat. So still had an actionable signal there to look at the trade. We look at JPM. That's the other one I like to trade. We got the 2-2 reversal. JPM is more in line with how XLF looks. So as far as which one would be better, I mean, I would say JPM is better than BAC. It looks stronger. So if XLF keeps pushing, then you would be looking at JPM first, then BAC. Sometimes I just prefer to go BAC. But if JPM keeps showing more strength than BAC, I'd be a fool to not go with the one that's stronger, right? So this is why, again, you look at the sector, then you go look at stocks in that sector. I don't really like Wells Fargo like that. I really don't like WFC. Do I look at the squeeze when analyzed sector? No, I haven't really been using the TTM squeeze anymore. My analysis of price action has just been better. So does everybody understand that? What I just broke down, what I'm breaking down, how you go from the sector to the stock, see the similarities, pick the one that's stronger, or just pick your favorite, because BAC would be my favorite, but technically the one that's stronger is JPM. Do we have any questions? Any questions at all so far? So I can kind of like knock that out. How so you did sectors? I'm confused with that. Can you go over mindset later when entering exit trades, trusting edges in yourself? Yeah, I can. One, it's not necessarily always the stronger stock. Sometimes the sector is actually mirroring the stock, because, like, for instance, if you go in Thinkorswim, right? Use Thinkorswim. You can actually go in here, go to the Analyze tab in Thinkorswim, and you would go to fundamentals. You can type in the sector right here and see what makes up the sector. So if you look at this, JPM is actually number 2 in the sector. As far as the top holdings, it's number 2. BAC is number 3. So you can really say XLF is more so mirroring JPM and probably, Berkshire, BRKB. So kind of like knowing what is the top holders in the sector can also affect your decision, because obviously more than likely, if JPM is taking off, what's the chance of XLF following it? A lot. Sometimes JPM can suck, and these other ones are just doing so well, it's still holding XLF and continue to push it up, even though the number 2 holding and XLF is just having an off day, right? And that's literally just going in Thinkorswim, going to the Analyze tab, clicking on the fundamental section, typing in the sector. And that way from there, if you don't know any stocks in the sector, this is how you find them out, right? So we go to XLE. Oxy, Oxy at one point this past year had creeped up to like number 3, but now SLB is like number 3, right? Oxy is at number 10. But the top holdings in like XLE is XLM CVX. That's why I always reference those two, because I know those two are the top holdings. And you see how much XLM CVX has a say so in XLE. I mean, they're 19 to 22% of it. XLM is 22%, CVX is 19%. So if XLE is running that day, the first two you would want to check is XLM CVX because they make up the majority. It's fade. Is my audio fading in now for everybody else? You're not really trying to predict or anything like that. The squeeze can help you see what might be potentially about to pop, but it doesn't necessarily give you an idea of what direction. Because just because it's blue right now and it has a low squeeze doesn't mean the next 2-week candle is going to fire that squeeze. Sometimes it'll go light blue like this and then go right back down. That's why, again, when it comes to indicators like squeeze and stuff like that, it's a lagging indicator. Sometimes you can't put all your emphasis on it, but sometimes they could be helpful in helping you find something that has momentum. 2 and 3 are direction, but as far as one being actionable signal, the candles that are actionable signals in the strat is hammer, shooters, and inside candles. Those are the candles that you don't want to be entering off of. Like every 2-2 reversal isn't created equally. Sometimes the best 2-2 reversals are off of hammers, right? But I don't always use hammers for my 2-2 reversals and things of that nature. But those are technically, the actionable signals. Sometimes the actionable signals look good, sometimes they don't. It also helps if you're entering around the broad information. Do I rate which sector to prioritize by volume? No, I don't use volume to prioritize anything. Yeah, you can do the same thing with SPY or whatnot. I trust the chart. I don't trust the seasonality. Because again, we're in a different marketplace. If we're technically in a bear market, right? Is in a bear market finance have issues in January in a bear market? What time frame do I look for actionable signals? Any time frame. I said hammers, shooters, inside candles. You can look for an actionable signal on any time frame. And it also depends on what type of trader you're being. If you're trying to be a swing trader, you look for actionable signals on like the 3-month, the 6-month, the year, the week. You look on it on the higher time frames, right? The higher the time frame, more than likely the stronger the actionable signal. But let me get back to XLF. So that's your 2-2 rev on the 2-week chart. Even though it won't trigger that higher time frame by the time it hits price target, right? We still could have been in here, gave ourselves a month or two on our expiration. This is one of the times you could have been looking at like the February expiration, the February monthly contract, and then been swinging that. Just, pick the right strike price, which picking the right strike price comes down to what is your target, and you want to be in the money by the time you hit your main target, not the in-between targets, because sometimes we have just in-between targets to let us know that the stock is still on track. But as far as the main targets for me, a lot of times it's going to be the swing highs, the candles that have these like blue dots on it, which is that inducement/stop hunt script by TFO. Inducement/stop hunt. This script right here. All right. And basically in that script, you just want to turn on show fractal highs and lows. I also did paste that script in the market facts and resources. So if you don't see it here, just go look for stop hunt/inducement, right? This is a lot of times showing you your swing high, your swing lows. This is showing you where the liquidity is at. So for me, right here, that would be a target, even though it doesn't have this one marked. That would be like my next target. The reason being is because these are going to be the areas that a lot of times the broad informations are going to get created off of. Swing highs, swing lows, right? So like for instance, you could draw broad information from this 3 back to that 2. Because here's your swing low. This 3 took out this swing low. I can draw from here back to here. There's my broad information bottom. My broad information top, you see how this 2 took out this swing high right here. I draw from this high back to that high. You always draw from low back to a higher low and from high back to a lower high. That's a broad information. It should look like this. It should look like a less than sign or a Pac-Man mouth. All right. Anything other than that is a trend line. This is what a broad information looks like. You draw from a low to a higher low and from a high to a lower high. High back to lower high, low back to higher low. That's it. That's the only way you draw it. Do I draw broad informations on sectors often? Not all the time because I see the broad information. A lot of times I'm drawing it more so for y'all, unless I'm drawing it out for the whole year, like from the top down, drawing all the old broad informations and all that other stuff, which I've done that in like Zoom recordings. So like for instance, as price approaches here, this swing high, there's liquidity right there. So when it breaks above it, right? If we didn't want to continue, we'd come back in the range and take out this low right here. And that would give us like a market structure shift. But again, I kind of go over that in like liquidity / broad informations. But this is why you would want to watch when price breaks above here. Can it get above this level, right? Can it get above this 36.83? Because you'd be running to the broad information. What you want to see is a close above this. And that second candle, listen to this closely. That second candle, if we close above that, it should immediately go. It should not come back into the range. All right. If it's going to go, once we close above here, that second candle, it usually immediately goes. Immediately goes. If it starts coming back down, it's bullcrap. All right. So that's what you want to see. When you see it close above a broad information, that next candle should immediately go. From that point, the algorithm is seeking out the next broad information. It's seeking out the next area of liquidity. All this stuff is computerized. There is an algorithm in place. All right. The broad informations are basically like your coordinates for the algo. Doesn't matter which time frame you choose to use the broad information. No, but you do want to be you would want to be aware of where a higher time frame broad information can get created off of. Does everybody understand that? I feel like I'm just on a road today. There's so many gems in this, I can't even keep count. All right. Not the part about the time frames and broad informations. I'm confused on what you mean by not the part about the time frames and broad information. The broad information is your support and resistance. That is the actual true support and resistance, because price seeks out liquidity. So let me break that down real quick. Price seeks out liquidity. Above the swing high, which is swing high when you look at it, is when you look at the candles, the first candle and the third candle's high is lower than the second candle's. So the second candle's high is higher than both the first and the third candle. When you go down to here for a swing low, the second candle right here, low is lower than the first and the third candle, right? Because you're always counting 1, 2, 3, right? And that second candle is always going to stick out. Like if you look at for a lot of people, if you look at your hand, your middle finger is taller than your point finger and your ring finger. That's what a swing high looks like. And if you point your hand upside down, that's what a swing low looks like. It's basically your middle finger being taller than your first finger and your third finger, right? That's your swing high, swing low. It looks like that. So if you look at your hand, boom. Liquidity is where people have their stops at. That's where the algorithm is drawn to, running people stop, picking up, running to that, basically that area where they know orders is going to be at, right? A lot of times people put their stops down here, right? So it'll stop these people out and also entice people to go short, right? Then they'll come and take out the other side, take out the high, right? Stop out those people who went short here and then entice some people to go long. And that's sometimes why you see price just skyrocket through a swing high, right? And that's what your broad information is showing. When you draw that broad information right here, like here to here, basically the next time price, if price comes all the way down here and it takes out that 3, to take out that 3, that's what the broad information line is showing you. That for it to take out the low of this 3 and run that liquidity, it has to go lower than it. That's why the broad information is at a slant to the downside, because it's basically telling you in order for it to run the liquidity right here below this 3, below this swing low, price has to go lower than it. So that's why it's at the angle. Just like if price wants to run the liquidity that's above this high, it has to go above it. That's why the broad information is at a slant. It's acknowledging that price has to go higher than it. That's what regular support and resistance don't show you, right? It's a horizontal line. In order for it to be taken out, in order for liquidity to hit it, and you understand that price, the angle of the line has to be slanted, because we understand price has to go lower than that or higher than that to run that liquidity. Does everybody understand that? So that's why the broad information line is at a slant, and that's why it makes sense for it to be at a slant. So are we good with that? Because I feel like that's the best explanation. I've never explained it that way before. I literally just came up with that. All right, so next up after XLF, sorry. So far, I just want to reiterate, because I've been long-winded with these different explanations and these other questions, and sorry for getting off topic. But so far this year, what we're liking is XLP, XLE, XLF. Now, XLP, I'm personally liking Walmart, and XLE, XOM looks the best in XLE as far as the strongest, and XLF, it would be JPM, right? And that's what we got so far. Now we go to XLV and we look at the 6-month chart. All right. Potential 312 setup. We looked at the year, the high of the year of the previous year, right? It's 143.42. So in order for us to get directional on the year and make a higher high than last year, and basically for this year's price to be higher than last year's price, we would have to get above 143.42. In order for us to get a 312 reversal, because this is a red 3, and if we went up, it would be reversing directions. Because this is a down, then we'd be reversing and going up. That's what reversals are based off. We're reversing directions, right? So 141.77 would be that trigger for the 312 reversal on the 6-month, and it doesn't have far to go to hit price target. Now on the 3-month, we did go outside last quarter. So right now we're just inside of that 3, which it could go either way. Let me delete this line. It could go either way, right? One of the other things you can keep track of is like 50% of this candle, and just read up on the 50% rule or whatnot on YouTube. And I might make a video on that. But on the 3-month, basically we don't have an earlier entry. We go to the month, and basically right here, we already went 2 down on the month for XLV. So now we want to see if we have the potential chance of going outside. Sarah Strat Sniper's YouTube video on the Sarah Strat Sniper's rule for going outside candle uses like the 50%. So we would see how price action reacts to the 137.74 level. All right, if I go down to the 2-week chart, Right now, we have a potential chance of going outside 2 week because this candle is still live. This upcoming week would be the last week of this 2 week candle. And right now we've closed above that 135.38 level. Let me see if I can move this setting. Hold on, where is it? Label, right? All right. Well, no, center. Hold on. See, what does that look like? No, that's not. So I want y'all to be able to see it. Right. Middle. Okay, what about center? I don't know why I don't see the center. Y'all can't really see it. Let's see, top, bottom. Yeah, you can see it now. That 135.38 level. So now we go to the weekly chart. We have a potential 2-2 rev this upcoming week for XLV, right? And obviously we don't trigger anything as far as the macro time frames. Let me double check that before I say it. Yeah, your monthly, your 3-month, all those time frames. You don't trigger anything until 141.77, but healthcare could look good this week if we can break above 136.57. And that's where you will look at your PFEs, things of that nature. So like, for instance, if you don't know what's in the healthcare sector, we go right here to TOS, type in XLV. That would be looking at Johnson & Johnson, ABBV, MRK, PFE, things of that nature to see if XLV starts taking off, these are the stocks I will look at in that sector. Like, let's say PFE, if that's looking good, let's look at PFE. Yeah, like PFE has a potential, 1-2-2 rev set up. So we will look at that going into the week and say, hey, if XLV really start taking off, or, PFE is pushing, I double check and look at XLV, make sure it's trending that same direction. And then, all right, boom. Now I'm, taking that trade when it triggers, right? Because everything's lining up. The sector is behind it, all that stuff. When the sector and every stock in that sector is going, that's called a simultaneous break. That's what we love to see in the strat. So for like XLV, that's something else to look at. You will look at like PFE or J&J in that sector. All right. Next up is XLI. XLI looks beautiful. 2-1-2 reversal on the weekly chart this past week. Let me go back to the 6-month. 6-month potential 3-2-2 rev. All right. If we can break above 103.31, we're trending in that direction. We go to the 3-month chart. All right. Same thing, 103.31. We look at the monthly chart. Same thing, 103.31. 2-week, we did a 3-2-2 rev on the 2-week. So you could have been in XLI stocks this past week, right? Once we broke above 99.24, we look at the weekly chart, and that was like right around our entry for a 2-1-2. Our 1, that's our actionable signal. So you could have took that knowing that, it was going to end up triggering that 2-week time frame. We go down to the daily. We get a close above it, below it, and then it kind of like gapped above. So you could have, like, let's say you got stopped out right here. You could have just re-entered once you seen us retake that line, right? And so for me, XLI, that's looking at stuff like AL, BA. Let me go here just to make sure XLI is industrials. So like your UPS, your CAT, your BA. Okay, so AAL wouldn't be that, but BA basically, and BA was an honorable mention. AAL is more so like jets, but still going off. So that's why I was looking at AAL. I thought it looked better, and a lot of people they don't really like trading BA. BA done burnt a lot of people, so that's why I didn't do BA directly. But I did say in the video it was an honorable mention. And so, like, for right here on the squeeze, you can see on the daily, it fired the squeeze. Like, this was a time where it looked good. But you see, like, right here on the squeeze where it goes light blue, then back dark blue, then back light blue, and then it finally fires. Like, that's the thing with the squeeze. Like, sometimes it'll go light blue, go back dark blue, scare you to sometimes getting out the trade, go back light blue, and then start taking off. So that's the thing with BA. But that was XLI. And that was really like the last one I would say that I more so like cared to look at. I did have XME down, which XME, show y'all what XME is. Materials mining. You see like CLF, you see X, you see AA, FCX. All right. So those are like what I look at when it comes to like XME. So we go like the 6-month chart. XME is close to go in 2-2 rev to the upside. If it can break above 55.01, we go to the 1 month chart. Same thing, like a lot of them have that like bearish 2 up, but if we break above that on the 2-week chart, we just went 322 rev on it. If we hit our price target, we triggered those higher time frames. So we look at like CLF. Let me just trash all these drawings. All right, so we look at the drawing. I mean, not the drawings. It went 3-2 on the 2-week chart. We go down to the weekly chart. See, it was just the 2-2 continuation. We go down to the daily chart, and you can see that 2-2 reversal right here. Kind of really didn't really move until Friday. This kind of was like back and forth, but Friday it really started going out. So we look at swing highs, right? What I was talking about, the liquidity, it's right here. This is where if CLF really wanted to go back down and fill that gap, after it takes out this liquidity, this is where we can, an area we can see a potential broader formation top get put in. But if we can close above this line, we could continue to that next liquidity spot, which would be right here, this next swing high. And that's how you target it. When you know that the swing high or the swing lows are where the liquidity is resting at, that's where a lot of times you could look to get in the trades. Like for instance, you see how this 2 right here took out the bottom of this right here. If we go look at this on a lower time frame, I guarantee you the bottom of this 2 candle on a lower time frame is a swing low. So like if I go to an hourly time frame, you see how we have basically like some, let me delete this, some like relative equal lows right here. It wasn't a swing low, but we had the relative equal lows. This is where like a broad information bottom gets put in at. And if not there, right here, when we ran this right here. So now I know that I could potentially take an entry around this area, especially when we came back above that price. 16, you see how it acts as a resistance. I mean, as a support, sorry. After it creates the broad information bottom, you see how all the closes are above that price. This is what you can use in combination. Once you draw the broad information and you know what you're drawing back to, put a line on that candle that basically was the swing low or the equal low that price took out. And from there, you would want to see a close above that, and you want to see what those candles do. So like when I see this 3-2 to end the day, this is something I could look at swinging, because I'm like, we just put in a broad information bottom right here. So now I can swing into the next day. I know what I'm targeting. I'm targeting what? The liquidity here. You could say right here, and you see how we kind of like blow through that, kind of the next day gap back down, but come back above it and act as support, right? Then I'm targeting. So here, these are my 3 areas of liquidity I'm targeting. And you see how like we ran this liquidity and we kind of pulled back before going back up. And then we ran this liquidity, we came above it, closed on it, below it, right back above it. That's what you want to be looking at, because it's like we get back above, we close back above it. The next day, or, you know what I'm saying, that next hour, we could keep going up, right? So just knowing that where the swing lows and swing highs are at, and how that's the areas of liquidity where broad informations can get made, that's where you would prefer to get your entries around. Like I would prefer to get my entry around here or on the retest of this high and where this swing low gets put in, because now I can just move my stop to right here. If that gets violated, I just get out, right? But that gives me a better place and a better area of interest of where I could be looking for a trade, because now I'm getting in around where the broad information is at, or where I know that a broad information top is getting respected at, right? And now I could try to take it to that next area of liquidity, or to that next broad information bottom, or that next broad information top, because I know where they're going to get created at. Can you use resistance lines to find broad informations? I wouldn't say you could. How do you find good trades in the sector? Go look at the sector, then go see what those charts are looking like. So try to find, you know, your bullish 2 downs or your bearish 2 ups or your inside candles, things of that nature, or something that looks similar to what the sector looks like. That way, you know, you're taking something in line with the sector, and you're not trying to go against the sector, or trying to go against the trend. Everybody got that? So that's how you break down the sector. That's what we looking like for the year so far. The best ones I'm liking so far this year: XLP, XLE, XLF. XLV, XLI. The honorable mentions would be like XME, XLC, right? So this is literally how you break down the sectors, how you go through the different time frames. Then you go look at, obviously I know the stocks and the sectors, but then, if you didn't know, you can use Thinkorswim if you have it, or sometimes you would just have to go to Google and Google the top 10 holdings. So you can figure out what's in that and then figure out what your budget is. Find the stock that's within your budget that looks similar to the sector, things of that nature. The only other sector I didn't mention is SMH. SMH is your semiconductor sector. That's not on sectors SPDR, but that is another technically like sector that people look at. That's probably why some people were saying 12. Because some people count SMH as a sector, some people don't, but that's your other sector. So your AMDs, your NVIDIAs, your MUs. But do y'all truly have a grasp on this? All right. Are we good? Did you get did you get what you asked for coming to this class? I've never looked at FXI. Um, I don't normally look at FXI because I'm not really too big on China. But I mean, it looks good. It's been gapping up. That's the only thing about Chinese sectors and stocks. It's so many gaps. Like Baba has so many gaps. The thing I normally play with China is like Neo. And Neo got a gap to fill. And it looked like Neo might be a bullish two down. Yeah. So like for instance, like Neo might be something I would look at because of potential 2-2 rev up and the FXI sector looking good. Because that's just what I like to trade. It's like Neo. I don't really mess with Baba like that. But you would go look at Baba. Baba looks good. It just took out an area of liquidity. So I would want to make sure it stays above like this swing high on the lower time frame. So if I go down to like the daily, because otherwise it's going to put in a broad information top right here. So we can stay above here, keep pushing up. I'd be targeting like the next area of liquidity, which is really just going to be like this gap and then that high. So looks good. A 3-2 reversal is when you have a bearish 3 and then the next candle goes 2 up, or if you have a bullish 3 and then the next candle goes 2 down, that's how you get the reversal. It's in research admin, not research admin. I'm sorry, market facts and resources. Oh, to share my settings for Strat Teach V2. I really don't really know how to share this because it's a long indicator list. Um, yeah, I mean, it's the longest mug. Let me see. Let me screenshot this. One second. Let me go to screenshots real quick. Edit this. I got like 4 monitors. That's why it's a lot. I gotta do all this. All right. Let me see. Pictures. Hold on. Screenshots. Boom, boom, All right. So I'll put it in the whatchamacallit. But yeah. So the indicator name for the blue dot is inducement / stop hunt by TFO. So that's the indicator with the blue dots. You just have to turn on the fractal highs and lows. You'll be able to watch this in the university.